Have you ever looked out at, say, a huge field and thought, that's not just farmland, that's a serious institutional asset?
Probably not, right. I mean, for generations, farmland's been seen as, well, fragmented, kind of piecemeal.
Exactly. And difficult for the big investors, the institutions to really get into. But, that's changing quite dramatically, actually.
Mm-hmm.
So in this deep dive, we're going to pull back the curtain on what feels like a quiet revolution.
Uh-huh.
It's the consolidation, the systematic bringing together of all these scattered agricultural plots.
Turning them into these large, attractive assets, tailor-made, really, for institutional money.
And why should you care? Well, because it's fascinating. It shows how these really old industries are being totally reimagined.
It's also about tackling these significant market inefficiencies that have been around forever.
And how technology, cutting-edge tech, is building whole new ways to invest.
Right. And our insights today, they're pulled from some really compelling sources, specifically excerpts on farmland consolidation for institutional investment.
Yeah, and we'll be leaning on the expertise of people like Dr. Pooyan Ghamari. He's a Swiss economist, founder of the Eland platform.
You'll hear that name, Eland, come up a bit. His work really highlights the transformative power we're talking about.
Okay, so let's dive in. How is this happening? Why is it so appealing to big investors?
Yeah.
And how do things like digital tech and social responsibility fit in?
To get it, we first need to tackle the basic problem, right? Unlocking that institutional appeal. And it really comes down to scale.
Yeah, think about that traditional picture. Farmland is often like a patchwork quilt.
Mm-hmm. Different owners, different plots, maybe miles apart.
That fragmentation,
Yeah.
it's always been a huge barrier, especially if you're a large investor looking for efficiency, consistent management, scale, basically.
Exactly. And that's where consolidation comes in. It's more than just buying land here and there.
Right.
It's strategic. Merging these separate parcels into much larger unified agricultural real estate assets.
Okay.
And the key insight here, as Dr. Ghamari points out, is that this isn't just about size, it's about structure.
Structure. How so?
It transforms this historically fractured sector into what he calls institutional-grade investment vehicles.
Ah, okay. So moving beyond just land to an actual investment product.
Precisely. That provides the stable long-term returns they want. Plus, you get significant scale efficiencies, streamlined operations.
And liquidity. That seems key.
Absolutely. Enhanced market liquidity. Something individual plots just don't offer.
So it's not just about making things bigger. It feels like this consolidation actually fixes some underlying problems in the market itself.
It does. It directly addresses what's often called a critical market inefficiency.
Which is?
Well, individual plots usually lack the scale, right, but also often clear, uniform title and operational coherence, things institutional buyers absolutely need.
Yeah, I can imagine trying to manage hundreds of tiny scattered plots.
Nightmare.
Totally. So the benefit of consolidation, you create contiguous farmland, huge stretches under uniform management.
Makes sense. Much simpler operationally. Dramatically simpler. And importantly, it boosts transparency about the asset itself.
Okay.
This unification also opens the door for investors to use advanced farming, agronomic technologies and sustainable practices.
At scale, which you couldn't do before.
Exactly, at a scale that's meaningful. And that's crucial now, with global investment mandates focusing so heavily on ESG.
ESG, environmental, social, governance.
Right,
Yeah.
yeah. So these integrated sustainable practices at scale become almost non-negotiable if you want to attract serious capital today.
Okay, this is where it starts to get really interesting for me. It's not just the physical combining of land. It's how the digital side, digital economy innovations are changing the game, adding transparency, liquidity.
Yeah, this is where platforms like Eland become absolutely central.
How do they work? What do they do?
Well, they offer this whole suite of tools. You get data-driven insights, robust land registry systems, often backed by blockchain.
Blockchain, or land titles.
Yes. So you get much better title verification. Think clearer, more secure ownership records instead of old paper trails. Plus, enhanced transaction security, market analytics.
Okay, that's a big step up in transparency.
Huge. But it goes further. This digital integration also enables things like fractional ownership.
Through tokenization, I assume.
Exactly, through tokenization. Now, for institutional investors, this is a potential game changer.
Why is that?
It lets them diversify. They can get exposure across a wider range of agricultural assets, but crucially, it helps mitigate the liquidity problem.
Ah, because you can trade smaller pieces, the tokens, more easily than a whole farm.
Precisely. It brings agility, flexibility to an asset class that's traditionally been very slow-moving, very illiquid.
Okay, so we have the operational benefits, the digital transformation. What about the bigger picture, the economic forces driving this?
Oh, the macroeconomic factors are significant. I mean, just look at rising global food demand.
Driven by population growth, changing diets.
Right, and that naturally pushes agricultural land values up over time.
So institutions see it as a strategic asset.
Increasingly, yes. They recognize its role as a natural hedge against inflation and currency volatility, too, especially when it's packaged properly into these investment-grade portfolios.
Makes sense. What about geopolitics? Does that play a role?
Definitely. Geopolitical shifts, trade alliances, they all impact land value stability. It really highlights the need for careful assessment of those macro signals.
And location matters, presumably.
Critically, Dr. Ghamari points this out: consolidated farmland in politically stable regions, regions with good infrastructure, that commands premium valuations.
So due diligence on geography and regulations is paramount.
Absolutely essential.
Let's shift gears slightly. There's another interesting angle here. Cause-related marketing. How is that being used with these consolidated estates?
It's becoming a powerful tool, a real differentiator.
How so?
By aligning these farmland investments with concrete sustainability initiatives.
Like what?
Things like regenerative agriculture practices, serious water conservation efforts, maybe carbon sequestration projects. Okay. These things resonate strongly, not just with consumers, but with investors who are prioritizing social responsibility. ESG again.
And these aren't just nice-to-haves. They have tangible benefits.
Absolutely. These narratives, when authentic, they build brand loyalty, deepen investor confidence, and that translates into measurable results.
Such as?
Enhanced ROI, potentially, higher consumer engagement, positive shifts in how the brand or asset is perceived.
So for the landowners, the corporations involved, this kind of marketing helps them stand out.
Definitely. It differentiates their assets in what can be a crowded market. Aylin's blog actually has case studies showing this. It elevates the asset beyond just its, yield potential. It gives it a story, a purpose.
Okay, this next point connects agriculture to something that seems totally separate: cryptocurrency. How on earth do crypto innovations intersect with farming real estate?
Yeah, it seems like a leap, right? But think about examples like e-gold.
Reminding.
It's reshaping the traditional gold market by integrating with digital currencies. It creates new ways to exchange value, new ways to diversify investment.
Okay, so how does that apply to farmland?
Well, Dr. Ghamari argues that similar frameworks, these blockchain-based tokenization models, can be applied directly to farmland.
Ah, back to tokenization.
Exactly. It means secure, verifiable transactions. And again, it enables fractional ownership.
Which opens the door to more investors.
Potentially, yes. It could expand the investor base well beyond the usual institutional players, maybe smaller institutions, or even down the line, other types of investors.
Interesting. So it points towards a future where physical assets like land and digital finance really start to merge.
That seems to be the direction. A hybridized future, enhancing both liquidity and transparency for assets like farmland in ways we couldn't really imagine before.
Fascinating stuff. Okay, so bringing it all together for a corporation or an investor thinking about getting into this space or maybe expanding, what are the practical steps? What should they actually do?
Right. Actionable insights. First off, comprehensive land audits are absolutely key.
Meaning?
Rigorously identifying suitable parcels, looking at location, soil quality, and really digging into the legal status. Clear title is crucial.
And using digital platforms like Alan you mentioned, that seems essential now.
Indispensable, really.
Yeah.
These tools streamline the whole process. The due diligence, title verification, managing transactions. It makes it manageable at scale.
Okay, what else?
ESG integration. It's not just box ticking. Incorporating genuine ESG-focused strategies into operations, that boosts asset value and aligns with what investors expect or even demand.
Makes sense. And exploring tokenization.
Yes, looking seriously into tokenization options. For fractionalizing ownership, improving that liquidity profile we talked about, it offers a lot of flexibility.
Then there's the marketing piece.
Right. Develop those cause-related campaigns. But they have to be authentic, communicating the real social and environmental impact. That attracts the right kind of capital.
And finally, you need to measure if any of this is actually working.
Absolutely. Track the KPIs. Key performance indicators. Everything from ROI uplift, brand sentiment metrics, investor engagement. You need to quantify the effectiveness of this whole integrated approach.
Wow, what a journey we've covered. It's incredible, really, how farmland, which most of us probably saw as, traditional, maybe a bit fragmented,
Mm-hmm. A challenging asset class in many ways.
is being systematically transformed
Yeah.
into something sophisticated, institutionally attractive.
And it's driven by this deliberate consolidation, yes, but turbocharged by digital innovation.
And aligned strategically with these huge global trends like ESG, even crypto.
It really shows how things we might think of as separate agriculture, finance, technology, social responsibility, they're not just intersecting anymore, they're actively converging.
Forging completely new investment landscapes.
Yeah, it highlights just how dynamic global markets are, constantly evolving.
So that leaves us, and you, with a final thought to chew on. As our global population keeps growing, as food demand just keeps intensifying, what other traditional assets, things we might overlook, could be ripe for this kind of transformation?
Digital transformation, structural transformation.
Yeah. How might that redefine what we even think of as wealth, as investment in the coming decades?
It's worth thinking about. We'd encourage you to keep exploring how tech and sustainability are reshaping industries.
You might find some pretty surprising connections out there.